Greetings, everybody. We'll go ahead and get started with our 2020 virtual producer forums in about 1 minute. Going to give another moment for people to get logged on, but we'll be with you in just a moment. All right, well, greetings, everybody. We'll go ahead and get started. Thank you for joining us for the 2020 virtual producer forums. They look a little bit different this year, given all the things that we're dealing with the COVID-19 pandemic. But I want to thank you for taking some time to join us, and as we walk through some of the issues that we'll be bringing forward into the next legislative session, and then also an opportunity to hear from you all if you've got any things that we're missing or anything that you'd like to see us address going forward. A couple housekeeping items. First, the Q&A section of this presentation is open. I encourage you to, if you have any questions or comments or concerns, to put them into the Q&A function of the chat. We will address those questions as we can get to them, but we also reserve some time at the end of the presentation for those questions. So I want to say thank you. Like I said, I'm Jon Godfread. I'm the insurance commissioner here for the state of North Dakota. I also want to introduce John Arnold, who is our deputy insurance commissioner, and he hasn't been with us on a producer forum trip yet. And I wanted to give him a chance to say hello to you all, and so you all can put a name to a face. And so I'll turn over to John.
Thank you, Commissioner. Thank you all for being here this afternoon. Appreciate getting a chance to meet with you virtually. As John mentioned, been with the office for a little over a year now, and then shortly thereafter a global pandemic started, so I haven't had the opportunity to really get out and meet many of you in face-to-face. Was looking forward to producer forums to be able to do that, but getting to meet you virtually and look forward to in the future being able to do it in person. Thanks.
Great, thanks, John. And John came to us from the Secretary of State's office, has a wealth of state government experience, as well as a really strong background in process improvement. So we've kind of tasked him as in a dual role of both deputy, and he is currently the producer licensing division director. So as you're going through licensing issues or questions, just know that John is there working on those issues as well as being a deputy for the department. It's been a big dual role, especially during the middle of a pandemic, but he's done a great job, and so we're happy to have him on board. So just want to go through the agenda briefly, what we're going to touch on. We're going to start with some producer licensing legislation. The first portion will be mostly kind of technical cleanup bills or issues that we'll be bringing forward. We're going to touch on rebating, touch on short-term limited duration policies and some changes there. Then we'll jump into property and casualty, or the P&C side of the world. We've got some more cleanup there. Discuss about our fraud division, as well as some electronic access changes that we're going to be making for consumers, which we think will be a big benefit for our consumers. Then we'll wrap up with a health insurance update and kind of give a brief update of what's going on in the health insurance world, and close out with some Q&A if you've got anything on your mind. So we'll go ahead and jump right into it. The first section here is, again, producer licensing. A lot of the issues on this slide are primarily just cleanup. There are technical changes that need to be done. We're hopefully going to combine these into one or two larger bills that we can bring forward to the legislature. We don't think there's anything really controversial in here. If there is, please let us know. We'd like to know that ahead of time before we go into the legislative session. But just to touch on the issues, the first one is in North Dakota law right now. It says you must pay the commissioner for your licensing fees. When in all actuality, you likely paid the NIPR. So we're going to adjust that to say you can pay the commissioner or the NIPR. It solves the problem when a licensee who maybe doesn't pay, then NIPR has no recourse to go after and collect what is owed to them. The next piece is allowing for electronic address changes. Currently, we still require some form to be filled out. We'd like to be able to do that via email or via an electronic form. We think that should save you all some time. It'll save some work on our side too, processing those, and we can do that in a quicker manner, in a more meaningful manner. So That should be a relatively simple change. The next one, this one affects the revocations for non-resident producers. Currently, right now, if a non-resident producer has their license revoked, we have to get a certified copy of that from their home state. The home state also uploads that and puts it into the producer database, which we have access to. So changing this law will just allow us to use the producer database to effectuate that change versus having to wait for a certified copy from the home state. As you can about imagine, when they upload that documentation and that information to the producer database, and then we ask for a certified copy, that oftentimes slows down the process and certainly leads to more questions, especially again when we all have access to that producer database. The next one is clarifying that there's an exemption for continuing education for individuals who just sell the portable electronics insurance. So think of the Best Buys, the Verizons, the cell phone carriers who sell you your cell phone coverage or your portable electronics insurance. That's generally the only line that they sell. This just clarifies that there's no CE requirement for those individuals. Storage unit bill. We adopted a storage unit policy last session. You may remember that. This one just clarifies that as storage units owners start offering their storage unit coverage, they need to be sure that they're naming their supervising entity or their DRLP so that we know who to go ask questions for if we've got any concerns or problems. That's just a simple cleanup that we need to put into the law, so we have our storage unit owners making sure that they're denoting who is their supervising entity. The last one on this page is a 1033 waiver process. Right now in North Dakota, if you are convicted of a felony that's a breach of trust, that's primarily around the financial world, you are barred from receiving a license, an insurance license in the state of North Dakota. I've had maybe 2 cases come across my desk in 4 years of individuals who have gone through a significant amount of rehabilitation. There's been a long enough time from their conviction to present day where they may be worthy of an insurance license in our state, but we do not have a process to allow for that. So a 1033 waiver process, a lot of other states have this process. It is simply, it sets up a board which is made up of the producer licensing division director, the consumer assistance division director, as well as the general counsel. And they'll review the facts around the case, the conviction and what has happened since the conviction and any rehabilitation efforts. And then that board will make a recommendation to the commissioner to say, well, maybe this individual should go through the licensing process, and then they will be allowed to go through the process that way. So it's an opportunity for individuals who paid their debt to society and likely could make a good member of the insurance industry. This provides an opportunity for them after some rehabilitation, after some time to perhaps enter in that industry. Obviously, there'll be some review done, like on the board, like I said, but we think it's a good process to have in place because we do occasionally get those individuals who have, like I said, paid their debt to society and are probably deserving of an opportunity to join our industry. The next one is probably got a little bit more guts to it, a little bit more perhaps questions and controversy perhaps, and that's around the rebating laws. You may remember 4 years ago when I came on board, one of the first things we did was change the rebating limit from $50 per year per person up to $100 per year per person for agents. Since that point, there's been a larger national discussion that's been ongoing around rebating laws across the country. I would argue that most states have a rebating law of some kind, save for California and Florida. They oftentimes follow the model legislation that came out of the NAIC, which is the National Association of Insurance Commissioners. But the interpretation varies widely across the states. And so we've undertaken an effort at the national level through the Innovation and Technology Task Force, which is a task force that I chair at the national level to review the rebating laws across the country and review the model law that comes out of the NAIC. We are to the point where we'll be finalizing that work probably in early December, but I wanted to give you a preview of some of the issues that we've touched on, and we will be bringing a bill forward to make some changes to our rebating laws. I think that clarifies what's a rebate, and hopefully puts a little more structure on this that I think that's beneficial to our consumers, beneficial to our companies and beneficial to our agent community as well. So I'll walk through that now. The primary focus is around value-added products and value-added services. So if those value-added products or services relate to the insurance coverage and they provide loss mitigation or loss control, they reduce claims costs or claim settlement costs, provide education about the liability or risk, monitor or assess your risk, enhance your health, enhance your financial wellness through education, provide post-loss services, incent behavioral changes in your health, which hopefully reduces your risk of death, or assist in the administration of the employee or retirement benefit insurance coverage, those would not be considered a rebate. So the easiest example probably is if a leak detection monitoring system or something along those lines, where if you have a homeowner's policy and you get the opportunity to have a leak detection system in your home, a little widget put right by your washing machine, that would not be considered a rebate, because that would obviously help you mitigate the loss or prevent the loss. And it's my firm belief that if we can, mitigate losses or help prevent losses, that's great for the consumer, that's great for the industry, and that's also very good for the agent community as well. And so this is an attempt to clarify what we mean by the value-added products and value-added services, and this is certainly more on the company side of the offerings, but I will touch on some of the agent discussion next. So also within the discussion on the agent side, and just want to, before we get too far into it, wanted to clarify that we likely will not be bringing this portion forward, but I did wanted to bring it forward to you all as part of the discussion that's going on in the national discussion. If we receive some feedback from you all, and if there's support there for it, we certainly can address it. I will say in some of the early discussions that I've had, there has been a resistance to making changes to this section of the code, which I understand. This is the portion that talks about the $100 per year per person. The movement on the national side and with the model law is likely moving towards a reasonable amount, which would be determined by the commissioner. So that'd be generally set through an administrative code, or moving to a $250 limit. Now, again, in some of the discussions we've had with some of the trade associations that are local here, there is some hesitancy to make any changes to this section of law. There's a lot of work that has gone into this area of the law, and they're more comfortable with the $100 per year per person, that for a gift, a prize, a promotional article, logo merchandise, meal, or entertainment activity, when it comes around the business of insurance. And so we'll likely be not moving forward with this, but again, wanted to make you aware that on the national side, there's discussions in this area, and we would certainly be open to any feedback that you all have as the agent communities, as you guys are on the ground and actually interacting with these laws on a day-to-day basis. So certainly open to your feedback on that portion. The last section that we're looking at in the rebating law, and the piece that's highlighted, is another piece that we likely will not be bringing forward, but I did wanted to bring it in for discussion. The highlighted portion addresses the commercial industry, or the commercial insurance side of the world, and basically says that if the commercial on the commercial side of the world, if it's in connection with marketing or sale, the retention of the contracts, as long as the cost is reasonable in comparison to the premium proposed, or proposed premium to the cost of the gifts of the service, it would not be considered a rebate. So essentially, that's taking the reasonable approach that if there is perhaps a multi-million-dollar commercial agreement between two parties, and you can look at offering some kind of gift or service that's in comparison, or in a reasonable comparison to the premium that's being offered. Again, I believe this may be a bridge too far for North Dakota, but I did want to include it as a discussion that's going on the national level when it comes to the commercial side of the world, and we're also certainly open to feedback on that space as well. The next bullet point is regarding raffles and drawings. This is one area where we do receive a lot of comments and a lot of, inquiries around if an agent is conducting an online drawing or a Facebook ad or something along those lines, how is that not a rebate? This would just clarify that as long as there's no financial cost to the entrance, the drawing or the raffle is not obligated the participants to purchase the insurance. The prizes are not valued in excess of the reasonable amount determined by the commissioner, which in this instance would be that $100 limit set in the previous section. And the drawing is open to the public, then those drawings are okay. Then those raffles are going to be okay. And so it gives some more clarity around the raffles and the drawing space, which is again is one area that we get a lot of questions and inquiries. The final point is here as an insurer, a producer, or representative of either may not offer or provide insurance as an inducement to the purchase of another policy. So you can't offer free insurance for buying another policy, and you cannot use the word free in the advertisement because we all know that there are costs associated with these value-added services or products, and that they're certainly not free, but they're likely baked into the insurance policy as a whole. So we think this will be a good opportunity to again clarify that and to make sure our consumers aren't being misled when it comes down to some of these value-added products and services. So that's the rebating section of the world. Again, if you've got any questions or comments, please feel free to put them into our Q&A feature here. The next one I want to talk about is short-term limited duration. Last session, we went through a pretty significant rewrite and actually wrote a chapter for short-term limited duration coverage. I know there are a number of you out there that operate in this space, and I wanted to make we wanted to make some kind of cleanups and some adjustments to this section, as well as breaking out another portion of it, and I'll touch on that here. Under current law, right now we have a 6-month policy with a 6-month renewal. So effectively, it's a 12-month policy. We're going to go and clarify that it's no longer than 12 months. It's effectively the same meaning and same but different wording. By going to this, the no longer than 12-month policy, we've heard from the companies that this will help them offer more products and kind of again remain consistent with other states and other product offerings that they have. So hopefully we should be able to have more products into our state in this area. The next piece is breaking out and trying to create an association marketplace for short-term limited duration coverage. The goal with this is try to address some of the needs we've identified in our small business owners kind of marketplace. A lot of our small business owners are really struggling to find good, affordable options when it comes to healthcare coverage. The small group market is a very expensive marketplace, especially on the ACA marketplace. And oftentimes they don't have the economies of scale to access that large group market. And so trying to think of innovative ways or unique ways that we can help this segment of the population. And we figured this may be an opportunity to have a discussion about creating an association short-term limited duration plan. So that would be an association with at least 25 or more members would have access to this marketplace. They'd be no longer than 12 months, would be offered for up to three renewals. And our association short-term plans would be required to cover all their essential health benefits. So they would be a relatively comprehensive plan, but there would be they would allow some underwriting, and that's outlined here. We've been in discussion with our carriers in our state. There is some interest in looking at developing plans for this type of marketplace. I will say there's one carrier that operates in our state that does have these plans available in another state, and so we would have some plan offerings, I think, relatively quickly. In determining what the savings may be and how this may look, I think that's going to be, as we kind of go through this process and have this discussion, we'll certainly learn more. But the goal is ultimately to try to give more options to our small business communities for healthcare coverage when it comes down to what they can afford and what exists out there. And so this may be a unique opportunity to do that. As I said, they will be required to cover those essential health benefits, and that's outlined here. So it will be a fairly comprehensive plan, but again, there hopefully will be some ability for our carriers to offer some perhaps unique either plan designs or some underwriting criteria in there that could help save some money and make these a little bit more affordable for, again, those small business owners who are really struggling to find affordable healthcare coverage for not only for themselves but for their employees as well. A few other changes that we're making in the short-term limited duration world is, as you know, under current law right now, If you sell these policies, you are required to keep a recording of those sales calls between you and the consumer. A lot of that was implemented to not only help protect our consumers, but also protect our agents. Oftentimes when we have complaints on the short-term limited duration policies, it ends up becoming a he said, she said issue where the agent will say that, I told them it wasn't a comprehensive coverage. The consumer was under the impression that it was comprehensive coverage, and then we're left trying to make a determination of what happened. So we thought by making the requirement to record phone calls that would provide some protection to the agents, but we certainly understand that was a fairly large burden on our agent community. It's not always the easiest thing to do to record those phone calls. So we're going to remove the requirement to record phone calls. We feel it's fairly well covered in some of our disclosure requirements, as well as the fact that any sale of these individual or association plans, they're only allowed through licensed and properly appointed insurance agents, and the producer's signature and identification number must be included on those applications. And so through the application documents that we've prescribed, through the disclosure documents that we've prescribed, we feel confident that those discussions are happening in the communities, and the consumers are being made aware of the plans that they're buying and the differences between a comprehensive coverage and a potential short-term limited duration plan. And so we're comfortable removing the requirement of recording those phone calls. So we'll move into the P&C side of the world. If you've got any questions, again, I'll just encourage you to please put them into the Q&A section. On the property and casualty side of the world, the confidentiality of market conduct exams. Right now, our financial company exams are marked as confidential. We figured we wanted to go in and clarify that also our market conduct exams are also marked confidential. That should hopefully help us in a free flow of exchanging of ideas and discussions as we get into these discussions with our companies. Now, certainly if we find big issues, we will be able to have those discussions and make those public through some of our discussions with the companies. But we think this is a good policy move to make those market conduct exams exempt and confidential. The credit for reinsurance, this is an NAIC model. It's part of the covered agreement, which is an agreement that the United States has entered into with our international counterparts. This is an accreditation standard, so this one isn't necessarily optional for us. But the good news is it primarily impacts foreign reinsurers. And so the impact here in the state of North Dakota should be relatively small. And then again, it also impacts those foreign reinsurers. And this is something that in order to come into compliance with the covered agreement, which the United States has entered into, the states need to pass this credit for reinsurance model. Working on abstracts. So current law is annual statements for the companies must be printed in the newspapers. We're going to make a change to allow those annual statements to be placed onto our websites. I would argue that the consumers who are looking for those annual statements likely are not going to the libraries to dig up either old newspapers to find them, or even aware that there may be a website that exists to go out and receive that. They're likely going to look to our website first to find those annual statements, and we'll create a section on our website to post those. There should be some cost savings in there for our companies as well, not having a requirement to print those in the newspapers. The next one is the confidentiality in withdrawn filings. So right now, if a company were to file a product with the department, we enter into discussion with them about, does this make sense and is this a good product? If through those discussions, ultimately they determine that, maybe it isn't the right time for this, or maybe this isn't the best product, and they withdraw that filing from the state, under our current law, that's an open record. And so that would be available to the public, which doesn't make a lot of sense to us necessarily because it's not a product that's offered in our state. And so we're going to clarify that those withdrawn filings are also going to be marked as confidential when they're withdrawn. The next one is an imposition for a penalty for a non-filing of fire district payments. As many of us know, about 7 different lines of insurance, there's a portion of those premiums go into the fire district grant fund. That fire district grant fund is then allocated out by the legislature to fund local fire departments. Every year we have a handful of companies that are doing business in our state that we have a hard time tracking down and getting a payment for, getting their payment filed and paid for the fire district grant funds. So this would be clarifying that we could impose a penalty for those non-compliant companies. Those dollars would then also go back into the fire district grant fund, which would then flow out to the fire departments as well. It hopefully can clean up some clerical work and some, a couple months worth of tracking down companies to get these payments filed that they have to file every year. We can hopefully clarify that with a reminder and also a penalty if for the repeat offenders. The North Dakota Insurance Reserve Fund and the Fire and Tornado Fund cleanup, as many of you I'm sure are aware, is that we turned over our primary operations of the Fire and Tornado Fund to the North Dakota Insurance Reserve Fund. From what we can tell on our end, that's been a very smooth transition. I've got to give a big credit to the North Dakota Insurance Reserve Fund for the work that they do and the interaction they have with our private agent community. And we think it's been a very good move to engage our the private agent community into these discussions, as they're generally the experts on the field, out in the field, and working with these clients on a regular basis. So by opening up the Fire and Tornado Fund to the North Dakota Insurance Reserve Fund, this allows those agents to give a comprehensive review of the risks for those local or state subdivisions and state entities, and give them a true risk review on what their exposures are. The only thing that we've really heard, I guess, is that, and we knew this before we turned this over, that there was a significant number of entities who were underinsured and they felt they were underinsured. And so having the opportunity to go back and make those corrections and clean up those exposures, we think has been certainly a good thing. As I've told my team here at the department, as well as in discussions with the Insurance Reserve Fund, I'm very happy we're doing it at this point versus after a tornado or after some kind of disaster, when those exposures would really mean something and we wouldn't have coverage for the property or for the entities that are out there. And so we knew there was issues. We knew that there were problems in this fund, and we knew we had some things to clean up. And we're really proud of the work we've done with the Insurance Reserve Fund, and really proud of the agent community for stepping up and taking this on as well. And so we've got a few minor tweaks again to continue to clarify and clean up that process and that arrangement between us and the North Dakota Insurance Reserve Fund. But again, from what we can tell, it's been a very good process and a very good program. But again, we'd be open to feedback if you have any thoughts or if there's any issues that we need to be aware of when it comes to the Insurance Reserve Fund or the Fire and Tornado Fund. Certainly please let us know, but from what we've heard, it's been a very smooth and welcome change. Moving into the fraud division. So as part of our agency restructure that we went through last session, we've also stood up our independent fraud division. So the fraud division used to exist under our legal department here in the department. We are now moving that into its own division. And so we're going to bring a bill forward to kind of clarify some of their roles, as well as outline and give some structure to the North Dakota Insurance Fraud Division. One of the issues we're going to be touching on is some of the funding for the fraud division. The bill we'll be bringing forward would provide for an assessment of $225 annually against each insurance company admitted to do business in the state of North Dakota. That would essentially equate to about $500,000 in revenue to the state for the operations of the fraud division. Now, we certainly understand that this assessment will likely be discussed at length in front of the legislature, and it's a discussion we certainly welcome. Part of the reasoning for having assessment of this nature is to, one, remind companies that they have a duty to report insurance fraud. There is a law in the state of North Dakota that if you believe that it's more likely than not insurance fraud has been committed, you have a duty to report that to the insurance department so we can investigate it. It's surprising at the number of companies that do not report insurance fraud. And so hopefully at the very least, bringing this discussion forward about an assessment will be a reminder to our companies that do business in the state that they have a duty, there's an obligation there to report fraud to our insurance department, because as we all know, insurance fraud is not a victimless crime. It does cost all of us through increased premiums every year. And so we take insurance fraud very, very seriously. And we've got a number of trained peace officers that their job every morning is to wake up and to fight insurance fraud. And so We've got them in their own division now, and they're operating, but this will hopefully add some more clarity to that. Additionally, with the insurance fraud division, the creation of the Insurance Fraud Auxiliary Fund. This would be a fund that would be created to provide specialized equipment, technology, and also essentially do insurance fraud public service and prevention campaigns and provide for awards. The money that would be going into this currently right now would be coming out of our newly created civil penalty for fraud. We will have more discussion around whether or not the penalties should move into the fund that's operating that. I think we're certainly open to those discussions and having some more thought put into that. But we do think it's important to create a civil penalty for fraud. Right now, our only avenue for operating under the fraud offense would be a criminal action. And I think you can all appreciate that there are times when an individual likely made a mistake or likely needed to just simply be reminded by the way of a fine or some other civil penalty that we're out there watching for this. We take this very seriously. And oftentimes there are issues that don't rise to the level of criminality, but would probably fall more in the civil penalty realm. And we're gonna bring the bill that'll be coming forward will be outlining the civil penalty for fraud as well. So that's the insurance fraud division. The next piece is electronic access. So this one is hopefully it's aimed at the consumers. So right now our insurers, so the companies, they're in control of how they make their policy endorsements and other policy related information available to the insureds, to the consumers. And we've run into an issue where there's been a few companies and they don't necessarily operate here, or they're not from this state, but whereas if a consumer were to operate with a third-party software vendor or third-party agent acting on their behalf, to perhaps do some shopping or some comparisons, that as the insured reaches out to the company for access to their policies and endorsement, that the insurer will then turn around and make that available to them via paper versus via the website. And that's clearly just simply a way to restrict access to some of these third-party comparison apps or software, which really are intended to give the consumer more control and more understanding of their policies and what coverages they have. So this just clarify that if an insurer makes their policy endorsement or other policy related information available to the insured on the insurer's website, that the insurer may not restrict the insured from using a third-party software that facilitates their access to that information provided on the website or accessing the website through a designated agent acting on their behalf. So it essentially clarifies that if you offer this information via your website or via a portal, that you can then not restrict that to a third-party software operator or designated agent working on the consumer's behalf, that you can't restrict how they take that information in. Before I jump into the health insurance update, I do have one question that came through. The question is, and I'll repeat it for the folks on the line, is can you speak more to the long-term goal of short-term limited duration plans? I'm concerned about how this will affect employers and their renewal periods after their renewal periods are over. So that's a great question, and it's certainly something that we're cognizant of. I think the real issue is, how do we get to some meaningful healthcare reform? I think when you couple what we've learned through the last, I guess, 6 to 8 years of the implementation of the ACA with our health insurance cost report that I'll touch on here in a minute, we're on a trend that is unsustainable. It's very difficult for our consumers, and especially in that small business world, to afford healthcare coverage and continue to afford healthcare coverage. And so this is, I believe, the association short-term limited duration plans, again, offering some of that more comprehensive light coverage for the associations, it admittedly would be a stopgap to try to get to some further reform. But I think the reality is we've got consumers and small business owners who are facing some critical decisions year over year and making the determination of whether or not I can afford to offer healthcare coverage or maintain my healthcare coverage. I think there's a need there for some more options to look at and have some folks be able to make some determinations and be able to hopefully have some meaningful coverage in that space. We do have another option that I'll touch on here through our reinsurance program, and maybe a combination of either the short-term limited duration association plans and the reinsurance program, one or the other. I think that'll be a big key discussion that we have during the legislative session of how to move forward to address, again, primarily that small group market and those small business employers who, again, are really one of our primary focuses when it comes to how do we ensure that they can still have access to healthcare coverage. So we just wrapped up a very significant healthcare cost report. We got authorization last session to go in and do a deep study on our hospitals and how that interacts with our hospitals and healthcare costs in our state. I will say this was kind of a one-of-a-kind report that I don't think has been done or duplicated in another state or has ever been done before. For the first time, we had access to hospital-level data, and so I'd encourage you to go in and look at this report. It's available on our website. It's linked to it on our PowerPoint that you should have available to you. It's a significant report. It's roughly 200 pages, but it's if you operate in this space, if you operate in the health insurance world, it is a fascinating report. It outlines a lot of issues I think that we've kind of anecdotally known in our state, but it puts some data behind it. Just some of the real brief highlights is that, we are number one, I think, in hospital cost or hospital expense in the state of North Dakota. We are in the top 3 in growth, and so it's kind of one of those things where we're one of the most expensive and we're also growing the fastest. I think the discussion of, well, that's because of our aging population, and if you look at the census reports, we're actually one of the few states that is getting younger. We're actually a younger state, so I don't know if that holds water. But anyways, the long and the short of it is this I think has outlined some of the data that in our state that we need to have some serious discussions about in our state, and it's very, very difficult to do that, especially during the middle of a global pandemic, and the needs and reliance on our hospitals and has been unlike ever before. But I think as we come out of the pandemic and as we move forward, we're going to have some hard questions to ask ourselves and discussions to have about how do we maintain healthcare coverage and how do we maintain meaningful healthcare delivery in our state at prices we can afford. Because if the underlying thing that you're insuring is going up at a quick rate, certainly your health insurance or your insurance will go up at that similar rate. And I can speak from the insurance side of the coin. We're seeing some never-ending pressure on the affordability of health insurance and making sure our citizens have access to meaningful, affordable healthcare cost coverage. And a big part of that discussion is the cost of receiving healthcare and how is healthcare delivered in our state. And so it was a meaningful study. It was a very good study. Again, we were, I think everybody was certainly caught off guard by the COVID-19 pandemic, but I think even with that, it still bears to play that there's some meaningful information in there. There's some meaningful discussions that, as things settle down, hopefully, and as we get through this pandemic, and we need to have more conversations about what the healthcare delivery model in our state looks like, and what does that mean for the affordability of healthcare in our state and probably in our country a little bit. So I encourage you to look at that. We did have a few recommendations coming out of that report. The first one is involving our reinsurance program. You may remember last session we passed the reinsurance program of North Dakota, the Reinsurance Association of North Dakota. That led to about a 20% reduction on the individual market for individual health plans, something we're very proud of. And given the utilization trends that we've seen since March to probably July, and now we're starting to trend back up and back to normal, we've assessed our companies to pay for the reinsurance program. Utilization took a dip. We have since now paused the assessments for the reinsurance program for the next foreseeable future, at least for the next couple quarters, which I think makes this program more sustainable in the future and allows us, we've built up some of the reserves, so we're able to fund this going forward. But we'll be bringing forward a bill to ask for a reauthorization of this program, so a continuation of this program for another 2 years, and also looking at studying the option of, can we layer on a private reinsurance into our existing reinsurance program, which would reduce the state share of the state burden for funding that program. This program is funded, one, by carrier assessment, so we assess the insurers in our state that operate in the individual market, as well as we get some federal pass-through dollars that are funded by the savings that we've created through the reinsurance program. So those dollars are then turned over to the state to fund this program. We've been in touch with CMS and SSIO and the federal government about, is there an option to take those federal dollars and purchase some private reinsurance to layer on top of this program, which would then lessen the burden on the state side. So that's a study that we'll be bringing forward as part of the reauthorization package for our reinsurance program. We do think it makes some good sense, and again, it would involve a waiver to our 1332 waiver, or an amendment to that waiver, and we'll be moving forward with that. Another piece that we'll be asking for to study essentially and maybe bring forward as part of our amendment package to our 1332 waiver would be combining the small group and the individual market in the state of North Dakota. What that does is that then gets that small group market access to the reinsurance program, so they would be able to take in some of the benefits of that reinsurance program, which should help put some downward pressure on those rates, which again goes at the one of our main goals of addressing the small group market and the small business owners in our state. And so we're going to be looking forward to taking a look at that. It's been done in a few other states, but we think there may be a good option here in North Dakota to look at combining those markets and again offering that benefit of the reinsurance program to the small group market. The last piece is medication optimization. As we all know, if those with chronic diseases and illnesses, if they stuck to their medication regimen and listened to their treating physicians, we see a lot better outcomes. The problems is oftentimes those individuals have multiple prescriptions. They have been likely in and out of the hospital, and so this would create a program that would partner our insurers, our hospitals, and our pharmacists to work together to create a medication optimization program, which would essentially be some check-ins and some follow-ups with consumers by hopefully licensed pharmacists to have discussions about what current medications are they on, are they taking them, are they having any issues. This program exists in a few other states, and it's shown to see some significant savings to the healthcare system as a whole. It gets back to the point again, as if the old adage is, if everybody who has high blood pressure took their high blood pressure medication, the healthcare system would save a significant amount of money. And so trying to encourage and incentivize and just have some of those discussions with those individuals with multiple diagnosis or chronically ill, and get them onto their medication regimen and making sure that they're following through with their treatment so that they can remain healthy and again hopefully avoid any catastrophic outcomes, which, as we all know, that's terrible for the patient, but it's also more costly to the system, and we all end up paying for that in increased healthcare costs. So that's kind of our brief update, our overview. We'll leave the Q&A section open here for another couple minutes here, and so if you've got any other comments or questions, please feel free to put them into the Q&A. While you're doing that, I do want to take a moment and just say thank you. Thank you for the work that you do. I've said it a number of times over the last 4 years that we all are working towards the same goal, which is a great consumer experience with a lot of different options and insurance that our citizens can afford. We come at it from a little bit of a different angle, but at the end of the day, again, our goal is the same. And so I want to thank you for your work in this industry. It is a noble industry. We provide financial stability and consistency and protection to not only to our citizens, but likely to their largest assets. And so this is again a very noble industry. It doesn't always necessarily get the love that it's probably deserved, but I do want to say I'm proud to be a part of this industry. I'm proud to get to lead this department and work with the talented individuals here in the department, but also with all the agents and the companies across the state, because we do provide meaningful impacts, and we really do help people. So I hope you take it that way, and I hope you're proud to be a part of this industry as proud as I am. So I want to thank you for that. Not seeing any questions that are coming in. I will again just want to say thank you again for joining us, and thank you for taking time out of your day to follow us. If you have any questions, if you have any comments, any concerns, you can always follow up with us. You can always check in with us. Probably the easiest way to get a hold of us is through our email address, which is insurance@nd.gov. That's kind of our info account, and that'll get routed to the right people, and you'll get a response back. But you can always certainly give us a call. Encourage you to follow us on Facebook and Twitter, and we've got a number of other social media feeds to stay up to date with what we're doing. And one last reminder, again, is to make sure you're keeping your emails updated with us. So we have your most current email. If you didn't receive the invitation for the virtual producer forums to the email you thought it was going to go to, that likely means we don't have the right one in our system. That is the primary way that we like to communicate with our agents is through their email. So if you do need to go on and change that, please just encourage you to keep your emails updated so you can make sure you're receiving important updates from the department as we go forward. Again, any questions or concerns, please feel free to reach out to us. You know where to find us. But again, thank you for your time today. I hope you all have a wonderful rest of your day.